Hey, good afternoon, everyone. All right, it's Friday. Markets are closed. Let's jump in here and take a look at what happened. Before we do that, let's kind of paint the bigger picture. Um, these markets have been extremely oversold, and they're really being driven by what the USDA has published, right? There's this perception that supply is swelling. This year's crop was bigger than people expected, as in the 23 crop, and the 24 outlook is very, very large. So when you look at the supply side of the United States balance sheet, we are growing it. Now, what can change on the other side of that is the demand picture. So domestic demand has been relatively strong, but the exports have been weak, and that's also being lowered or capped by strong Brazilian production and weak Chinese demand, right? So there's this perception all around the periphery of the grain market that supply is growing and demand is shrinking. So you've got this weakness or softness that's prevalent all throughout these markets. We don't seem to be reacting to any kinds of bullish news. So 1 week ago today, we got the bearish onslaught of information, is what I would call it. Just really a lot of negative impact. And so this week we got to watch the trade digest those numbers and really start to really start to reveal how they viewed them. And I think what we're seeing in the charts is that the trade is buying into what these numbers are, and that we need a bullish catalyst in order to see things higher. So let's take a look at what these charts say, because we know that all the fundamentals are contained in the charts, and the charts are currently discounting the future, or what is perceived to be the fundamentals moving forward. And as long as we're consistent in following these charts, then the final prices will take care of themselves over time. So here is Kansas City wheat. We did have a nice reversal bar yesterday. It wasn't a double close. It wasn't an outside day. That would have been had yesterday's bar closed up above the high from Wednesday. And today we failed to reach that level again after trading up above it. So I don't love the wheat situation. This is old crop wheat here that we're looking at, because we did punch out the new low. But the inability to poke back up above and meaningfully test the resistance that's up here is problematic. And then as far as new crop wheat goes, you can see exactly what we did. We talked about this earlier this week. This little uptrend line that connected these two pieces got broken here on Monday or Tuesday, sorry. And when that got broken, we said, hey, we need to just set a floor at this $6 level and say, let's set it and forget it. I don't want to be as aggressive on old crop as we are on new crop, but let's set a floor. Let's put some parameters on it. So you can sell a 650 call and buy a $6 put. It doesn't cost much money, and it keeps your upside open to $6. You can see what we did today. We had the reversal yesterday, and we came right back to the bottom side of this trend line and reversed and fell from it. So I don't know which direction this is going to go. You're still under the influence of this green bar right here from yesterday. So technically that's still in control, but we were unable to poke up above that. So I think that means you got to look at corn and beans and understand what they're going to do. So I'm perfectly comfortable with the positioning that we have here. Looking lower, I'm not looking to make any adjustments to that position here. And again, this isn't a spec or anything else. This is just saying, hey, let's not let the $6 level get rid of us. Let's keep our upside open and make sure we can adjust that position if and when we need to. All right, let's look at corn. Old crop corn first. We do have a red 13, which is normally a buy signal, right? So we did have a hook reversal. Not quite as strong as wheats, but we did have a hook reversal here. And today we had follow through that faded away towards the end here, and or kind of midday. So we have really not a lot of follow through, nothing to get overly excited about. And you can kind of see that pattern throughout this whole little downtrend, right? 2 days, 2 days, and then lower we go. So we'll see if selling comes out on Monday. Obviously, there's a weekend ahead of us. Anything can happen in these markets, but for today I don't see anything that has shifted our tune to say, oh my gosh, we've got to run in and buy this. This is super bullish. If you're in long old crop bushels and you're tolerant of the risk, then go ahead and hold them. I think that's okay. If you are intolerant of the risk and don't want to have any downside risk, then you can either sell them or you can pick up some put protection. But with this red 13 right here, I don't want to eliminate the upside because that is technically a buy signal. So you can buy calls up at the 460, 470 level. And if we get a little rally up into here, those would pay out. Otherwise, I would just sit tight and be patient as these things unfold. A little bit more bullish old crop than we are new crop. New crop is only on a day 4 here. So this is showing that we have another 9 days or so of lower trade. And they don't have to be sequentials. You can still get a rally and then come right back down. You don't have to go 13 days in a row to get a 13. In fact, you can spread them out over quite a bit of time. For instance, this red 13 up here, there's 10 days in here that didn't trigger a new advancement in the count. It's just the way that program is written. So I don't see any reason to be on the buy side of new crop corn. We did have the hook reversal. Today we reversed it again. We'll see what it decides to do on Monday, but I think the outlook here is not fantastic, and we need to finish pricing in the bearish information that's in this market before we get too excited about the upside. Okay, beans. Beans had a nice reversal day yesterday. Today they had nice follow through. I've been talking about this for a while. Where we've reversed from is significant, this is the 61.88% retracement level of the May to July rally. This level right here, this is the 1.618 extension off of off of this wave of decay right here. So this is the 1618 extension. What matters to you in these numbers is that they're close together. When these Fibonacci numbers are close together, you get these, typically we'll find some consolidation as traders debate and try to explore whether there's enough horsepower to take it lower or whether that's going to provide some support. So it looked earlier today like we may find the support, but obviously that didn't hold out to be the case. We traded lower. We're in a 4 count here. We're in a red 2. So what we're set up for here is just continued weakness, and I think potentially all the way down to 1130, maybe worse on beans if or unless a catalyst is able to present itself to move higher. Remember, this action today happened in spite of an old crop beans sale. So old crop beans, what did they look like? Pretty much the same. We tried to trade higher, unable to take out Wednesday's high, and then we just turn right back around and trade lower. This is Friday right here, right? This is the big day on Friday. And we traded inside that range for the most part after trying to poke out the bottom. So there is some argument that beans may try to find some support here because we're unable to close below the low of the report day last Friday. And that is true. That's definitely a good argument, but we've only had 3 days to trade it. We need more trading time, in my opinion, here in order to make it work, or to make it really definitive one way or the other. So for today, our thinking is stay hedged, don't overthink it, don't worry about it. Just let the momentum unveil itself and keep yourself positioned where you are. Okay, that is about 9 minutes. I know it's not what everybody wants to hear because we want to hear, hey, we're going to go straight up, but there's got to be a catalyst in order to do that, and you got to clear a whole bunch of resistance levels before you can get too excited about beans, wheat, or corn. So we're going to be super patient. We're going to hold those hedges, and we'll be back with you on Monday. Have a great weekend, guys. See you later.